purpose of this study is to compare and evaluate ratios between two publicly traded Malaysian companies, Kawan Berhad and Cepatwawasan Berhad, using financial analysis from annual reports for 2020 and other relevant sources. I will explain briefly about the main business of these two companies. Kawan Berhad is an investment holding firm with subsidiaries and associates engaged in plantation, oil chemical, sale of industrial chemical and manufacturing, general transportation services, property development, and investment holding. Kawan was founded in 1965 and began operation as a plantation company in 1971, when it took over the assets and liabilities of its UK parent company, Kawan Rubber and Coconuts Plantation Ltd, as part of a rehabilitation project. Throughout the years, BKAF has expanded from its major plantation industry into the manufacturing of industrial chemicals. The second company is Cepatwawasan Berhad. Cepatwawasan Berhad, or CGB, is a Malaysian investment holding company with subsidiaries that are primarily engaged in oil palm cultivation, milling, quarrying, and the sale of oil palm products. Cepatwawasan Berhad is headquartered in Kuala Lumpur, Malaysia. Sabah in East Malaysia is home to roughly 10,280 hectares of oil palm plantation, which the companies Cepatwawasan Berhad owns and operates.
Hi, Assalamualaikum. My name is Nushazana Mati Muhammad Noor, matrix number 289953. Today, I will present you about different performance between two companies, which is company Batu Kawan Berhad and Cepatwawasan Berhad, using financial ratio method. The main use for financial ratio is to gain information about company using numerical value taken from financial statement. So, how actually we use the benefit of financial statement? It used to performing quantitative analysis. Financial ratio divided into several categories. First, liquidity ratio. It used on determine either way the company can use its current or liquid asset to settle its current liability. Today, I will use two ways from liquidity ratio, which is current ratio and quick ratio. This method is the easiest way to get current ratio. We only need to divide the total current asset and total current liability based on company statement of financial position. This is the formula of current ratio. Let's move to the Batu Kawan Berhad and Cepatwawasan Berhad current ratio. For Batu Kawan Berhad, the total current asset is 8,880,903 divided total current liability is 2,839,273 equal to 3.13. While for Cepatwawasan Berhad, total current asset is 71,758 divide total current liability is 67,289 equal to 1.07. This ratio measures the short-term debt paying ability of the company. So, between Batu Kawan Berhad and Cepatwawasan Berhad, which is the best company? According to the figure from the previous slide, we notice that both of company current asset exceeds their current liability, that means more than one, and it is a good sign. It shows that Batu Kawan Berhad has higher current ratio than Cepatwawasan Berhad, which is 3.13 over 1.07. Next, quick ratio. Quick ratio is clearly different from the current ratio. Quick ratio is more strict when it comes to determining liquidity. This ratio is like the current ratio but exclude current assets such as inventories and paper expense that may be difficult to quickly convert into cash. For the calculation, we all know that the quick ratio is more accurate in indicator of a company capacity in very short-term obligations. And this is how the formula of quick ratio. Total current asset minus inventory divided total current liability. Let's see each company quick ratio. For Batu Kawan Berhad, total current asset is 8,880,903 minus inventory 2,022,895 equal to 6,858,008 and divide total current liability 2,839,273 equal to 2.42. For Cepatwawasan Group Berhad, total current asset is 71,758 minus inventory 60,482 equal 55,276 and divide total current liabilities 67,289 equal to 0.82. According to the previous slide, there are huge quick ratio difference between Batu Kawan Berhad and Cepatwawasan Group Berhad, which showed that Batu Kawan Berhad has value 2.42 and Cepatwawasan Group Berhad only has a value of ratio 0.82, which is less than 1. From the calculation, Cepatwawasan Group Berhad unable to cover the company's current liability and Batu Kawan Berhad has no difficulty on settling its debt. That's all from me for liquidity ratio.
Assalamualaikum. Thank you, Anna, for your presentation. Now I will be presenting for the annual report of activity ratio for both companies. But before that, what is an activity ratio? An activity ratio is a type of financial metric that indicates how efficiently a company is leveraging the asset on its balance sheet to generate revenues and cash, commonly referred to as efficiency ratio or activity ratio. This helps gauge how a company handles inventory management, which is key to its operational fluidity and its overall fiscal health. Activity ratio, there are three turnovers: inventory turnover, total asset turnover, and account receivable turnover. An inventory turnover is a financial ratio showing how many times a company has sold and replaced an inventory during a given period. Calculating inventory turnover can help businesses make better decisions on pricing, manufacturing, marketing, and purchasing new inventory. The formula consists of cost of goods sold divided by average inventory. You can see the overall calculation for both companies. Cepatwawasan Group is at 10.15, which is a high inventory turnover. However, Batu Kawan Berhad is at 6.60, which is a low ratio turnover. Now, what does this mean? This implies that a high ratio will help reduce the risk that their inventory will become unsellable due to any kind of damage. However, a low inventory deteriorates the liquidity and financial strength of the company. Total asset turnover is yet another activity ratio that measures how efficiently an entity uses its asset to tender a sale. Formula for total asset turnover is net sales divided by average total assets. Now, both companies have shown a very low ratio asset turnover. This implies that both companies may not be performing well and efficient enough to generate sales and revenues from its asset base. The accounts receivable turnover. An accounts receivable turnover is an accounting measure used to quantify a company's effectiveness in collecting its account receivable or the money owed by customers or clients. This ratio measures how well a company uses and manages the credit it extends to customers and how quickly the short-term debt is collected or is paid. The formula for accounts receivable turnover is net sales divided by average trade receivable. Accounts receivable turnover for Cepatwawasan Group Berhad is at 17.55, which is a high receivable turnover ratio. Batu Kawan Berhad, however, is at 12.22, which is less. Now, a high accounts receivable turnover would imply a company's account is efficient and has a high proportion of quality customers that pays their debt quickly. However, a low accounts receivable turnover means that they have poor collection process, and this may be due to the company extending credit term to non-credit-worthy customers who are experiencing financial difficulties. The next speaker will continue this presentation.
Alright, next we want to talk about profitability ratios. Profitability ratios is simply to indicate how efficiently a company generates profit and value for shareholders. Higher ratio results are often more profitable, and also there is two elements in this profitability ratio, which is profit margin and also return on asset. For the first element, of the profitability ratios, which is profit margin, the formula for the calculation, we will take the profit for the period and be divided by the net sale of the company. For the first company, we will take Batu Kawan Berhad for example. Batu Kawan Berhad, the profit for that period, which is 914,435,000 ringgit for the profit for the period, and we will divide by the net sales, which is 16,078,124,000 ringgit. So the answer we will get the profit margin will be in percentage, which is 5.69%. So we will use the same method for the next company, which is Cepatwawasan Berhad, and the percentage for the profit margin is 6.47%. If you want to compare for between this company, the higher percentage for the profit margin, we will see that Cepatwawasan Berhad has higher percentage in terms of profit margin. For the next element, we will talk about the return on asset. For the formula for the calculation for the return on asset, we will take profit for the period, and we will be divided by the average total asset. For the average total asset, if you want to calculate it, we will have to take the initial inventory plus final inventory. We will be divided by 2. For the first company, we will get, for the example, is Batu Kawan Berhad. For the profit for the period of the Batu Kawan Berhad, which is 914,435,000 ringgit. For the average the asset, we will take the initial inventory for the Batu Kawan Berhad, which is 28,824,464,000 ringgit, plus plus final inventory, which is 22,334,826,000 ringgit, and the total will be divided by 2. So the answer for the return on asset, which is on percentage, for the Batu Kawan Berhad, we will get 4.14%, and the same method for the Cepatwawasan Berhad, we will get 3.14%. So if you want to compare it, we will get that Batu Kawan Berhad had higher percentage in terms of return on assets.
And the last one is leverage ratio. What is leverage ratio? Leverage ratio means a set of data that shows a company financial leverage in terms of assets, liabilities and equity. They show how much of a company's capitals come from debt, which is a good predictor of its ability to satisfy its financial obligation. There is 2 elements in leverage ratio, which is debt to asset ratio and debt to equity ratio. The calculation for debt to asset ratio is we take a total liabilities from the company and we divide with a total asset from the company, so we can get the ratio in percentage. Okay, now I will show you the debt to asset ratio calculation for Batu Kawan Berhad. The total asset is 22,334,826 ringgit, and total for liabilities is 9,713,547 ringgit. When we divide the total liabilities with total asset, we got the debt to asset ratio, which is 43.50%. The calculation is same for Cepatwawasan Group Berhad, and the debt to asset ratio is 29.09%. As a conclusion for this calculation, we can see both of this company has a good ratio because it's below than 60%. These companies generally regarded good because the ratio in about 30% to 40% only. Now we move to the second one, which is debt to equity ratio. The calculation for this ratio is different because in this ratio, we will take the total of debts and divide with the total equity. For the example, let's see the calculation for Cepatwawasan Group Berhad. The total debt is 140,150 ringgit, and for the equity is 341,552 ringgit. The result after we divide the total debts and equity is 0.4102 or 41.02%, and the debt to equity ratio for Batu Kawan Berhad is 76.96%. As a consequence of the lower debt to equity ratio, Cepatwawasan Group Berhad has a better ratio than Batu Kawan Berhad. It is because companies that take on a lot of debt may find it difficult to make a payments. Debt financing is likely to be more expensive than equity financing since it requires debt service or monthly interest payments.
An in-depth examination of Cepatwawasan Group Berhad's financial health as measured by the two metrics just discussed suggests that the company's financial sector is a better place for investors to put their money. Cepatwawasan Group Berhad outperformed Batu Kawan Berhad on 5 out of 9 measures, namely inventory turnover, profit margin, debt to asset ratio, and debt to equity ratio.